Hey everyone, and welcome to this Friday FreightWaves Now episode. I'm Zach Strickland, and up a little bit later we'll have Kevin Hill with the DHL Pricing Power Index, but up first, carrier update presented by PowerFleet. Stay tuned. Hey everyone, and welcome to your Friday carrier update presented by PowerFleet. So we're watching our tender rejection rate bounce this week, coming back up. It was flatlining there for a little bit for a few days, but now it has jumped up quite significantly, back up over 25.6% for the first time in a few weeks. We did see some settling coming down out of the Labor Day holiday. A lot of this had to do with that capacity side, where the supply side, where a lot of people taking vacations, etc. But also, the nation's largest market out there in Southern California did see some stabilization, which pulled that rejection rate down. If you look at it seasonally speaking, this is not that uncommon, although it's a little bit of an exaggeration of what we see as a seasonal effect, where we have this little this declining tender rejection rate in the United States coming down out of Labor Day before increasing again entering October. So capacity tends to have these little undulations in September. This is 2018 in green and 2019 down there in the yellow. So again, not terribly unseasonable for this to happen, which again for 2020 we'll take what we can get on anything that looks like it's a return to normalcy. Tender volumes starting to bounce back up themselves. So tender volume index shooting back up over 15.6. Again, volumes continue to be a driving factor in this freight market, as we see carriers really struggle to balance their networks around the United States. Looking at it seasonally speaking, again, we see a similar pattern, again more exaggerated this year than in previous years. 2018 there in the green and 2019 there in the orange. So tender volumes certainly, have this declining impact after Labor Day, and then they start to bounce back up entering October. Now, October, if you look here in the green and orange lines, they're dropping. So there's a little bit of a decline at the 1st of October as the first of the quarter really starts to settle in. And again, that's not that unusual. End of quarter, surge of freight. Beginning of quarter, kind of a softening as people start to get ready and ramped up for peak season coming in November and December. Take a little bit of time to catch their breath. So looking at our weighted rejection index, where are the hottest markets in the United States right now? Look for the blue. It's a little counterintuitive, but the blue markets on the weighted rejection index in our map there in Ontario, Los Angeles, Memphis, Indianapolis, all leading the way there. I've got the weighted rejection index on a tree map today, so the top two markets for seeing that increase in tender rejection rate week over week with a market share, Ontario and Indianapolis. The coldest markets in the United States, however, the ones that are seeing the biggest decline in rejection rate with a large amount of market share, Dallas and Richmond, Virginia, down there at -10 and -6. These are both very strong polar changes in the weighted rejection index, if you will, for these hot and cold markets. Looking at our tender market share map, this is just to give a little bit of a background. We've got Ontario, of course, the largest market in the United States right now, 4.6% of the total volumes or tender volumes moving on up. And Dallas, of course, is sitting there as well as one of the largest markets. So you can kind of see what we're talking about when we're saying large markets with tender rejection rate change. We don't want to value the Bismarck market and Green River, Wyoming, as much as we would, say, in Ontario and a Dallas when we're looking at the freight market. So looking at Ontario, California, right here, along with Indianapolis on the outbound tender rejection index, you see that Ontario is increasing definitely week over week from that trough. Indianapolis has a lot stronger increase in the tender rejection rate week over week. But again, not as much volume as Ontario, so that Ontario value is going to be a little bit more heavily weighted as carriers now are struggling to get back out west to cover that market as well. Looking at Dallas and Richmond, Virginia, you can see Dallas trending down. That's a pretty strong trend line down, with Richmond, Virginia really coming down significantly from 30% down to around 21.9% here in the last week or so. So you can see that the market volumes definitely play a role here, but you definitely don't want to ignore Richmond, Virginia or Dallas in terms of being in markets that you're not going to see those spot market rates really drive the market as you did in the weeks past. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hey everyone, and welcome to the weekly DHL Supply Chain Pricing Power Index. I'm here with Kevin Hill, who's going to give us a rundown of what we're seeing with who's got the leverage in the freight market right now, Kevin.
It's the carriers. It continues. We ramped up to 85, and then we've been at 85 for the last 3 or 4 weeks. We've fallen back to 80. We've kind of hit a peak, but guess what? It's going to change on that. Nothing. Life is going to continue as normal. Carriers still have all the pricing power. It's just that everything slowed down. Tender rejections have kind of peaked at 25%. But what does that mean as well? I think you were going through a little bit of data just a second ago about Dallas and rejection rates. It's probably repricing lanes higher.
Exactly.
Right? It's not because capacity is entering the market, it's because prices are going up, which strengthens the pricing power format that we have here on the DHL Supply Chain Index. So we're at 80. We're coming off that 85 peak, gearing up for holiday season. So over the next 3 or 4 weeks, we'll probably vary between 75 and 80, I would imagine, because the market's staying strong.
Yeah, do you think that, we've seen it in seasons past where October kind of softens a little bit off of what we're seeing? Do you think we'll see something similar there?
I think we will. I think we're coming out, we're going to soften just a little bit. What does that mean, though? I mean, it doesn't really mean anything. 85 or 80 or 75 or 80, back to 80. Yeah. We can bounce along all those
Regardless,
avenues.
It's still high.
It's still high, right? It's still high. It's just not getting higher, appreciably higher right now. But once we hit the holiday season, I mean, if history is any guide to us, we're going to ramp up a little bit more. We might touch 90. Yeah. We might go over 95 for maybe a week or two during the heightened, maybe in December. Yeah. But we'll have to wait and see on that. But we have a lot of spending data, and one of the reasons why we fell back from 85 to 80, especially for the next few weeks, is this is a Bank of America credit card spending. And you see, in April it drops off. We all know the economic slowdown or shutdown. And then we're kind of just breaking even right now. We have little peaks and valleys in there, but it's about the same as it was last year. Total credit card spending. Now we know it's a mix shift, and that's one of the reasons why load volumes are so strong from those intangibles, travel, lodging, entertainment, into tangible goods, home improvement, consumer electronics, things that you truck around, things that are imported. We look at West Coast volumes, imports, volumes coming out of LA. We've been talking about that all week on different shows on FreightWaves, right? So it's really a large part of that, and so we feel 85 back down to 80, and we reset for the October season until we ramp up into the Black Fridays and the real holiday surges.
You can see right around the holidays, we see that increased credit card spending. People get off work, they start spending a little bit more money, and of course, that's what drove your number up to 85 there for a bit, was that Labor Day peak. So again, looking into November, November and December, like Christmas, is definitely stronger than Labor Day and July 4th in terms of retail, right?
It really is. And it'll be really interesting to see these graphs getting closer into early November. You're going to start seeing spikes. And once we have the other chart that you can find in the article itself that's up on FreightWaves.com right now, is sector by sector. So we have all the different retail sectors, department stores, gasoline sales are still down 20%, 15-20% for year over year. The airline industry, everything like that, but the real tangible physical goods that people buy each other for Christmas are double-digit increases over 2019 right now, and it'll be interesting to see those charts once we get closer to the holidays.
For sure, that's good stuff to look at, especially right now and the year-over-year change. That'll do it for today's DHL Pricing Power Index. All right, thank you so much for watching, and be sure to check us out on all our streaming media sources such as Apple TV, and everybody have a great weekend.